Okay, now we are continuing with our question. We have already calculated our gross profit. Now we are going to other operating income. The other operating income that I'm only going to look at for now, it is the one that is appearing on these adjustments that are from A up to F. The other ones, we'll look at them when we go on to the other page from G onwards. So for now, I can see that we can actually be able to calculate our rent income. There's rent income. Where is our rent income? Rent income is here. They said the rent income, they said it's how much? It's 144,313. Now let's look at what they are saying on adjustment number B. What is it that they are saying on adjustment number B? Rental income for March 2020 was received and recorded on 20 February 2020. This is what you're supposed to understand. This is where you need to understand what happened so that you can be able to adjust for it. When is our financial year ending? Our financial year is ending on 29 February 2020. But here they are saying that the rental income for March 2020 was received. So what does that mean? It means we've got income received in advance. What do we do with income that has been received in advance? We subtract it from the amount that is given, is it? So in other words, we are saying that this 144,313 is not an amount for 12 months. It's actually an amount for how many months? 13 months, because it is up to March 2020. But it was supposed to be instead to end on 29 February. But it is going up to March. So it means 144,313 is for 13 months. So the first thing that we need to do is to find out how much is the money for 1 month. And then when you find that 1 month, then we can subtract it from the rent income. So how do we calculate the 1 month? We are going to say 144,313, which is the rent for the 13 months. So if we want to find the money for 1 month, we are simply going to say times 1 over 13 months. Okay? So in other words, when we calculate 13 into 144,313, let's do that calculation on our calculators. We'll get something like 11,101. 11,101 per month. 11,101 per month. So now that we've got our amount per month and we know that there is a month in advance, now we can simply subtract the money for 1 month, which is actually the money for March. Okay, so when you subtract this 144,313, 11,101, we are going to remain with our rent income at 133,212. 133,212. So this is our new amount for the rent income. Okay, so for now, like what I said, I'm only looking at an item which has got adjustments on this page 9. Anything that has got adjustment, which is a part also of the other operating income, I'll look at it when I go on to the other page. Okay, so for now, I'll look at the other items that have got adjustment, maybe from C up to F, and look at those ones before we can actually look at the other areas of the question. So on the rent income, remember what I said, you have to find out how much is it that was paid in advance. This amount is indicating an amount for 13 months. You divide by 13 or you multiply by 1 over 13 to get the amount per month. When you get the amount per month, that is the income received in advance for March. You subtract it from 144,313 to remain with 133,212. Okay, now we are moving on. I'm looking at what is it that goes on with adjustment number C. They are saying Happy Limited paid a 40% deposit on their audit fees. So it's an adjustment for the audit fees. Let's go on to the audit fees. The audit fees that are given here, they are 25,000. So let me indicate audit fees. How much? 25,000. Now let's read the adjustment. They are saying Happy Limited paid 40% deposit on their audit fees for the year. The balance will be settled on the 5th of March 2020. So what is this adjustment telling us? It's telling us that this 25,000 is only 40% of what was actually supposed to be paid. So in other words, we are supposed to find the remaining balance. If they paid 40, it means what percentage is remaining? 60%, so that we can actually get the 100% amount for the audit fees. So how do we then get the 60%? It's very simple. We are going to take the 25,000, which is indicating the 40%, and then we multiply it by the percentage that we are looking for, 60%, over the percentage that we already have. Okay, so let's calculate that this will give us the 60% amount. Let's go on to our calculators and find out exactly how much are we going to get. Okay, by doing this calculation, we're going to get 37,500. This is indicating the what? The 60%. We have got this 40%. So in other words, now we are going to say 25,000 plus the 60%, which is 37,500, which will give us, we can go again to our calculators, 37,500 plus 25,000, it is actually going to give us a final amount of 62,500. 62,500. Okay, there is also another way that you can use if you want to get the 62,500 straight without calculating the 60%. We already know that we have got 25,000, which is already our 40%. But what do we want? We need 100%. So we say times 100 over 40. This will give you a straight 62,500. Okay, so these are the two methods that you can use. You can either use this method whereby you calculate the 60%, you add it here, but I would actually encourage you to do the first one that I have done, because I would want you to show this calculation like this in your answer book, whereby you are saying, in order for me to get 62,500, I had to calculate the 60% and I added it to the 25,000 to get 62,500. Or you can still get the 62,500 and then subtract the 25,000. It will still give you the 37,500. So whatever way you do it is still very correct. Okay, we are done with the audit fees. Okay, now we are looking at D, adjustment number D. According to the physical stock count, trading stock on hand amounted to 358,240. Okay, what we do here with this adjustment, we have to go back to the pre-adjustment trial balance and look at the other trading stock which is shown there, which is actually our opening stock, which is 360,870. We have to compare the two to see which one is bigger than the other one, so that we can be able to know whether we have got a deficit or a surplus. If the one in the pre-adjustment trial balance is bigger than the one that is on the adjustment, that is a trading stock deficit. But if the one on the adjustments is bigger than the one in the pre-adjustment trial balance, that is a surplus, which means it will be recorded under the other operating income. But if it's a deficit, then it has to be recorded under the operating expenses. So the trading stock in the pre-adjustment trial balance is 360,870. The one that is on hand is 358,240, which is a lesser amount. So which means that we have got a trading stock deficit. So let's calculate the trading stock deficit. Trading stock deficit. So in other words, I'm saying trading stock deficit is an expense. You record it under the operating expenses. So it's 360,870 minus 358,240. It will give us something like, let's go on to the calculators. It's 2,630. 2,630. This is our trading stock deficit. This one we are already done with it. Okay, let's move on again to E. Let's move on to E. Adjustment number E is saying the creditors for salaries figure of 25,100 in the pre-adjustment trial balance reflected the following two situations. Okay, the salaries clerk had incorrectly processed the February salary of employee B. Harrison, who had left the company on 31st January. So B. Harrison left on 31 January. He left on 31 January, but the clerk made a mistake of giving him a salary for February when he's no longer there, is it? Already we know, we can understand how we are supposed to deal with this adjustment. a person was given a salary which he was not actually supposed to get. So in other words, how are we going to adjust for this? We are going to look at his gross salary for February, the one that he was given, and also at the contribution that were made by the employer. Okay, that is what we are going to use to adjust for our salaries. So if we go to the pre-adjustment trial balance, we find out the salaries that are given there. Salaries, they are 240,000. 240,000. Okay, we are going to adjust our salaries. Remember what I said? We are supposed to remove that salary which was given in February. It was not supposed to be recorded because that person had already left. So it's how much? 28,000. And then we are also going to subtract the employer's contribution, which is 148. 148. Let's go on to our calculators and find out exactly how much now we remain with as money for our salaries. It's actually 211,852. 211,852 is our new amount for salaries. This is the amount for the trading stock deficit. Okay. We'll continue on part B of our calculations. You can see that the question is a bit longer, and we'll start from F going onwards. But so far from A up to E, I'm sure I've done justice with the calculations that I've done for you. I'm sure you'll be able to understand exactly what is going on. How did you get the final amounts that we indicated? I thank you so much for tuning in. Tune in again when we look at part B of these calculations. Until we finish this question paper, the question paper from the Northwest Province, remember I said it's from Northwest Province, accounting paper on September 2020. This question paper is available on the internet. You can also download it if you would want to use it when we are doing this question. And you can also even request for it. It is available in the